Hi, hello, welcome to Emotional Traders. So, how is the trading today? So, market is opened with a huge gap up in the morning. After that, as soon as it opens, we have seen a severe fall. Thereafter, it has recovered. Okay, fine. So, today it is date is 21st August 2025. So I have traded in Sensex. No, like most of the positions, no, like from yesterday I have carry forwarded for today. So today I have not seen, there's a choppy market. So I uh, closed my positions with almost 4,400 rupees. I closed it for 5,000, but it closed for 4,400 rupees. Okay. So, but days end to M is 8,000. But anyhow, this is the actual P and L is this one. Okay. So if you come to the today's market, yeah, so for tomorrow, so for this side I will plan for upside. No, if this breaches I will plan for downside. So I'll make this entire range as a no trade zone for tomorrow. Okay, I don't trade anything within this range. Okay, but if it comes to here, so 25,020, this is a great support as per my analysis. Okay, so from tomorrow, from here, if it bounce backs based on price action, I will see the tomorrow's price action. Based on price action only, I will plan for upside from here. Okay, first I will check the price action, thereafter I will go for the upside. Okay, so this is all about the Nifty. So if it comes to the bank Nifty, the same thing. Okay, so this from here I will plan for upside, this side I will plan for the downside. Okay, so I always do only this is the no trade zone. See, by looking into the previous day's chart, I will just only analyze for the view whether upside or downside. But actual trade I will take based on tomorrow's price action only I will take. Okay, after forming the price action, after confirmation only I will go for the trade. Okay, so don't do that as soon as it crosses, don't take upside. As soon as it breaches, don't take downside. That is not correct. So after crossing this upside, you have to see the price action. The same way, after breaching this particular downside, you have to see the price action. Based on tomorrow's price action only, we have to take the trade. Okay, so this is all about today's P&L and analysis. So now we will discuss about the potential difference between the naked option buying and the spreads. So now let us understand the potential difference between the naked option buying and spreads. Okay, so first, if we come to the naked option buying, say let us take an example, Mr. Mahesh. Okay, so he is the retail trader. So before discussing the differences between naked option buying and spread, so I am asking a Mahesh, why are you doing a option buying? Okay, why are you into option buying? Okay, so then Mahesh is replying that, so I have seen so many videos in YouTube, Instagram, Twitter. So many trainers are there. Trainer X is there, trainer Y is there, trainer Z is there. They all are doing trading in option buying. They are making money. Okay, I have seen their videos. So that is the reason I have decided to make money from the stock market. So I am trying to do the option buying. This is what answer we are getting from the Mahesh. Very good. So then what Mahesh is doing? Mahesh, so he taken the course from trainer X. Okay, so here he learnt all the concepts. So what is the support, what is the resistance, what is the trend line, what is the RSI, what is moving average, what is VWAP, what is risk reward. Okay, so what is super trend, all the concepts, what is price action, everything he learned it. Okay, and also like he also learned about the risk reward also like 1:2 risk reward we have to maintain. Everything he learnt from this particular X by paying some money. Very good. So he prepared all the pitch. Mahesh is ready to go with the option buying. So he started the option buying. So now assume that the market is there at 25,000. The nifty is there at 25,000. So after doing all the technical analysis, Mahesh comes to the conclusion that from here market will go up. From here market will go up. So with that reason, Mahesh is buying the call option 25,000 call option for 150 rupees he is buying. Okay, he is buying for the 150 rupees. So very good. So in here 135 rupees, this is the stop loss he kept. The same way a target is at 180 rupees. Very good. Okay, so this is the following 1:2 risk reward ratio. Okay, now what happened suddenly once the entry is done, suddenly it comes and hits the stop loss, that is 135 rupees stop loss. Okay, so like majority of this is okay, but at some situation like Mahesh cannot digest this particular SL. Okay, so there are some chemical reactions in his mind, and that chemical reactions make Mahesh not to digest this particular SL. Why? Because he has done all the technical analysis. After doing the technical analysis, multiple confirmations, he decided that the market will go up from 25,000. But as soon as he taken the entry, suddenly one big candle comes and hits is the stop loss. Okay. So here Mahesh is not able to digest. So with that, what we'll do, immediately he'll take the re-entry. Immediately he'll take the re-entry at 135 rupees. Okay. Which he is not supposed to do. This is not taught in his course, but the chemical reactions, what is happening in his mind is making him to take the re-entry immediately. So immediately he has taken the re-entry. Unfortunately, this also hits the stop loss at 120 rupees. Okay, 120 rupees stop loss. So again immediately he'll take one more entry at 120 rupees. So this also hits the stop loss. Hereafter, Mahesh trading is not in control. Okay, I'm not telling that every day happen this. No, it won't happen every day. Okay, so once or twice in a month this will happen. That we call it as a worst day. This worst day, so Mahesh lost all his control and he lost all, like whatever the money he made from past 1 week, 10 days, all the money he is losing in single day. Okay, he is losing in single day. So if you are facing such kind of problems, please put your problems in the comment section. We will discuss in detail. Okay, this is what happening in the Mahesh. Okay, this is one scenario. Let us take the another scenario. Let us take another worst scenario. Okay. Okay, the same thing, same scenario. So after analysis 25,000, market will go up. He taken a C entry at 150 rupees. So SL is 135 rupees and target is 180 rupees. So as soon as he taken the entry from 150 rupees to, it will go to the 160 rupees. So as soon as it goes to 160 rupees, like what Mahesh feels that there is the possibility market may come down from here. Today market is choppy market, it may comes down. So that is the reason he'll take a exit here. He'll take the exit here with a profit only, 10 rupees profit. It's a kind of a middle drop. As soon as he exit, what will happen? It will reach to the 165 rupees. Okay, then Mahesh feels that, again the chemical reaction in his mind, what it tells that unnecessarily I came out, whatever the analysis I have done is perfect, unnecessarily I have taken the middle drop. So let me take once again, with that 165 he'll take a re-entry. As soon as he takes 165, again it will come back to 160. Here he will exit and from here he lost the control. Whatever the control is there, he is out of the control. Okay, so again I am telling, these scenarios will not happen every day. Mahesh will not behave every day like this. Only once or twice in a month Mahesh will do. Not only Mahesh, you, me, everyone will do the thing. This is because of the chemical reactions which is happening in our mind. We are not able to control that emotions. With that, again, Mahesh lost all the money. Okay. So now Mahesh comes to the conclusion that these markets are very choppy markets. Naked option buying is very difficult. Immediately it is coming and hitting the stop loss. Okay, so I am not able to stay in the trade. That is the reason. So now Mahesh will see like another YouTube channel or another social media channel. There the another trainers are there who are teaching the spreads. Then Mahesh feels that okay, maybe naked option buying may not suits for me. So better I'll go for the spreads, and he will take a spreads course here. He'll go to the other trainer, say there is a Y trainer and he is teaching about the spreads. So he's taking a course on spreads. Okay, fine. So now anyhow everyone knows about naked option buying. The spreads and all, like I'll just cover in 2 minutes. Okay, so what is the spreads? Say for example, market is nifty, index is at 25,000. Okay, so ATM call buying one lot, ATM plus 200 CE selling at one lot. This combination we call it as a bull call spread. This we call it as a bull call spread. Okay, so in this scenario 25,000 CE, so buying at 150 rupees. The same way 25,200 CE selling at 60 rupees. This combination we call it as a bull call spread. Okay, so in this bull call spread, this is a low risk, low reward strategy. So here, if you see the max loss, what is the max loss here? Max loss is equals to difference between the premiums. Okay, so which means that 150 rupees minus 60 rupees is equals to 90 rupees. So 90 rupees is the, 90 rupees is the maximum loss. So if you come to the maximum profit, so maximum profit is nothing but difference between the strikes minus difference between the premiums. Okay, so what is the difference between the strikes? Here it is a 25,000 and here it is a 25,200. So 200 is the difference. So 200 minus, what is the difference between the premiums? Difference between the premiums is the 90 rupees. Okay, so which is equivalent to 110 rupees. This 110 rupees is the maximum profit. Okay, so this 90 rupees is the maximum loss. This 110 rupees is the maximum profit. So this is the reason this is a low risk, low reward strategy. Okay, so what is there? Mahesh learnt this in course and now he don't want to go with the naked option buying. That is the reason Mahesh is converted to do the spreads. Okay, so now we'll see what will happen here after starting the spreads. So as I said, as everyone knows, that this is a completely low risk, low reward ratio strategy. Okay, so 90 rupees risk, 110 rupees reward. This is the strategy. Okay, so everyone knows that majority of the times the market is there in the range bound only. Majority of the times market is there in the range bound. When there is a range bound situation, like we cannot see any difference in the profit loss in the spreads. Almost it will be running in the no profit, no loss zone only. Why? Because to make profit in spreads or to make losses in spreads, we need a very big move. Whenever we see the very big move, then only we can see the profits or losses into the spreads. Okay, with this region, say for example, if index moves 60 points or 70 points also, like we cannot see much difference in the spreads P and L. We cannot see difference in the spreads P and L. So that is the reason, like what the Mahesh is telling. So everything is good in spread. Here in the spreads there is no risk, but I came to the stock market to earn the money. Though the market is moving 60-70 points, I am not able to make any money. Why? Because the strategy itself, it is no risk, no I mean limited risk, limited reward strategy it is. Okay. So after spending some time with the spreads, Mahesh comes to the conclusion that no, this is also will not suits for me. I want money. I want to make money. If I see that there is a Y trainer, there is a Z trainer who is providing excellent course in option buying, so let me go and join in the another training. Okay. So this training is provided by Mr. Z and he is going to the another training, which means that so he is jumping from spreads to option buying to spreads. So he is into the loop. So not only Mahesh, majority of the people are facing this problem. If you are a fresher, okay, you may not relate to this point, okay, but assume that if you are having a 6 months or 1 year experience, definitely majority of the people will relate to this particular topic. Hope if you are into this situation, please do comment in the comment section, so that if you are facing any psychology problems, definitely we will discuss about in detail. So now this is what happening. Then immediately you can ask, sir, what is the conclusion? Finally tell the conclusion whether to go with the spreads or naked option buying. Okay. So here this is all. First thing is that we have to fix our psychology. Definitely strategy is important, okay, but on top of the strategy, psychology very important. You have to fix it, and this psychology fixing is not same to all the traders. It will vary from trader to trader, okay. So that is the reason, like I suggest always, in before trading we have to create a framework which suits to our personality, okay, which suits our personality. Okay. So personally I do my own framework. Okay. So whatever I am doing a framework, I made a detailed video. The detailed video I am giving link in the description. So please do watch that particular video so that you will come to know. Okay. So finally conclusion, like spreads are good, naked option being good. Okay. But the trader, whoever that there, based on their personality, we need to take a decision to go with the naked option buying or the spreads. So each and every strategy has its own pros and cons. We cannot decide that this is the good and this is the bad. Okay. So this is the reason every trader first needs to fix the psychology. If you not fix the psychology, then this you will be continuously going in the loop. Okay. So that is what, always to fix the psychology we need a framework. Okay. So what is the framework? Okay. So this again 20 minutes video, the detailed video is there in the link. Please do watch that link. Okay. So hope you enjoyed this particular content, and also my weekly P&L reports also I have posted in the YouTube. So please do watch those videos also along with the psychology concepts. Okay. So please subscribe to this channel and also share this channel to your friends. Please like to this particular video. So hope you enjoyed the content. We will meet in the next class with the next topic. Thank you very much. Take care. Bye bye.